Then you say assess your market risk. Now, I've been watching the market. Everybody's been watching the market. It's up, down, up, down, up, down, up, down. Best day ever, worst day ever.
Isn't that wild?
Yeah. Oh my gosh. So I mean, as we think about that, it's crazy. And you say you might not have time to recover the older you are.
For sure. As we approach retirement, generally speaking, we become a little bit more conservative. We become a little bit more concerned about keeping what we have versus trying to swing for the fences and get the double-digit returns every year. We become okay with lower returns for lower losses in the bad times. And since October of this year, and there's a lot of reasons I won't go into for the sake of time, but there's a lot of factors that are contributing to this market correction that we're experiencing right now. Ultimately, lost my train of thought there, but ultimately having a plan in place that's in line with two major things. Your risk tolerance. How much risk are you comfortable with? As I was getting to, that's what I was getting to, is the older we get, the less risk we typically want.
Right.
And then the risk capacity of your plan. See, for some people, when they retire, their expenses are $3,000 a month. Social Security is going to pay them $4,000 a month. Well, the money in the market doesn't matter if it goes up or down. They don't need it. For most people today, however, they're depending on that money in the market. So your risk capacity is determined by how long until you'll need to spend those dollars. And the sooner it is, the more conservative they should be. And the longer it may be until you need that money, the more aggressive or growth-oriented you could be on those funds. So know your risk tolerance and know your risk capacity. And biggest thing I can urge you right now is don't panic. Don't sell at the bottom. Don't get nervous. As long as you're invested according to your risk tolerance up front, you don't panic in times like this.
Right.
If anything, you may see buying opportunities.
Okay. You also say get Roth ready. So explain that.
Oh, this is one of the biggest topics, and we just got through year end, and tax reform happened last year. But at the end of the day, as I mentioned earlier, most people are coming into retirement today with a lot of qualified money, 401k, IRAs. All that money is still being fully taxable when they pull it out, either because they need to spend it to pay their bills in retirement, or they hit the magic age of 70 and a half, and even if you don't need the money, at 70 and a half, the government's going to force you to take out at least 3.65% per year, and it increases every year, so that they can tax that money. They don't want it to sit there tax deferred forever. And so there's this unique window of time that often arises in a client's plan between retirement and 70, where you are in the lowest tax brackets of your life. While you were working, you were in higher tax brackets. Once you hit 70, you may jump back into those higher tax brackets with these required distributions as well as Social Security and pension payments. So if you can maybe consider paying more taxes today by converting money from IRA to Roth IRA, paying the tax on the amount converted, and when you do that, the money now grows tax-free forever for you or your kids or beneficiaries. And on top of that, you're in a situation where they don't force you to take a required distribution on those funds. So the more money you have in Roth, I'm telling you right now, the better off you're going to be. You're going to thank yourself. And if you're younger out there watching this today, as you add money to your 401k every month, consider the Roth 401k versus traditional, so you don't set up this tax time bomb in the future.
And then you say, and I've heard this a lot, and I actually posted this out on What's Next a couple of months ago. What should I do if I can't retire and plan to continue working? This is a huge item for a lot of people. So you say cut down your debt.
Yeah, I mentioned it earlier as part of our income and expenses and assets and liabilities. If we have debts, first thing I like to say is don't beat yourself up. If you're not in the place you thought you'd be today, the best first step you can take is forgive yourself for the mistakes you made to get here, or others if others may have caused you to be in this situation. Accept where you are and get an action plan and take steps to move forward in the right direction. I think that's the biggest thing. So many people are ashamed that they have this debt.
Right.
Well, if you're ashamed of something and hide it, you can't take it and tackle it and get rid of it.
Right.
And so if you do have debt, get a plan. Number one, reduce your budget. Take all the extra money you have and throw it towards that debt. If you have a lot of credit cards, take the smallest balance first, pay it off, and then move all that money towards the next one. It's called a debt snowball. And that snowball will eliminate that debt quicker than you may think. And so that's one way that we can eliminate debt. Another way could be downsizing a home, moving into a smaller home where you're now in a position where you don't have a large mortgage payment and the equity of your current home could pay off the next condo that you buy, for example. But getting your debt in order is extremely, extremely important.
So excellent tips. And then your final tip is where you come in, seek a professional.
Absolutely. It certainly doesn't have to be us at Great Waters Financial. If it is, we'd love to help you in any way that we possibly can. But there's people out there that specialize in your situation in life. So if you're younger, there may be a firm out there that specializes in the accumulation phase of life. If you are in or near retirement, you likely need someone now that specializes in retirement planning and can help you navigate the income and the tax and the estate planning and all the things that come together to make a truly sound retirement income plan. One thing I meant to mention but didn't earlier is charitable planning. A lot of what we do in advising our clients is helping them get the most bang for their buck with their charitable giving. Because of tax reform last year, most people are now taking the standard deduction. They can't itemize, which means all their gifts to churches, charities, synagogues, wherever they give their money, they're no longer getting a deduction. There's a couple tips, and you can email us if you have questions on these, but if you're in your 70s and have these required distributions, the only way you should give charitably is from the actual required distribution of that IRA. It's called a QCD, Qualified Charitable Distribution, and if you do it that way, you never have to pay tax on the money. It goes directly to the charity. You don't receive it as income. It's wonderful. And then if you're pre-70, there may be a way to bunch your deductions, use a donor-advised fund, maximize your deductions in a single year, get above the standard deduction, and then go back to the standard for future years.
And you also say, don't be fearful that you don't have enough, that somebody couldn't help you with a plan.
Absolutely. So many people underestimate where they are. And maybe you aren't in the best situation, but it still is better to have someone on your side as a trusted advocate, as a fiduciary that's guiding you through the journey, helping you make the most of what you've worked so hard for and getting on the track that you want to be at. And so don't let the fact that you're behind where you wanted to be stop you from seeking help. That's the reason you probably should seek some help. If I'm not feeling well, that maybe is the time I should go to the doctor, to figure out what's wrong. And, with health, that's a pretty obvious thing. But sometimes with our finances, I don't know if it's because we're fearful or we're ashamed of it, but we so often won't seek help in our financial matters, and it's very important to do that. Right behind our health and our faith, I think our finances are extremely important, right up there on the need-to-have list with air to live our lives today. And so, seek help. Find someone that has your best interest at heart and is willing to take the time to sit down with you, craft a personalized plan unique to your situation that can help get you in the best place possible.
All right. Justin Halverson, thank you so much for joining me.
It's an absolute pleasure. Again,
my guest tonight has been Justin Halverson. Here's how you can reach them. Just head to www.greatwatersfinancial.com in case you have any questions.